Welcome back. Now to our next conversation. Analysts have predicted that the Nigerian equities market will remain positive in 2022, despite being a pre-election year. A review of the market performance in the fixed income and equities market for the first quarter of 2022 and an outlook for the first half of 2022. We have Luke Ofojebe, head research at Vetiver Capital Management. Great to have you on the program. Good morning.
Good morning. Thank you for having me here today.
Great to have you. Well, the market's positive return year to date has increased to about 19.01%, with the all-share index crossing the 50K level. You know, at a time when global equities are very volatile. How are you seeing this?
Quite an interesting one, really. Nobody really expected the Nigerian market to have returned about 19% by this time of the year. But when you look at the major factors driving this positive return, then it shouldn't be surprising. Rates in the fixed income space are very low. So investors right now want to seek better returns, and that's why they are diverting more liquidity to the equity market. Then you also know that for a number of companies, they've released impressive results, and that has also helped to boost investor trading sentiment in the equity market.
Right, but do you see any resistance levels, looking at the market, at this time?
Yes, but not really strong enough to halt the positive run in the coming quarters. The reason I said this is because since late 2019, early 2020, is the local investors that have dominated the equity markets. And for these local investors, they are not usually long-term oriented. So when they see significant gains within a couple of trading sessions, they start taking profits. So what this means is that they start selling down these equities. So maybe in the coming trading sessions, we might see more negative sentiment because investors want to take profits. But the reality is that over the course of the year, we should see more positive buying sentiment in the equity markets, mainly supported by impressive corporate releases, as well as the low yield environment in the fixed income space.
Right, and a couple of analysts have said this run is due to more of local investors participating in the market and less foreign investors. So I'm wondering if the foreign investors actually come back, what can we expect?
Right now, coming back, it's a dream that doesn't look like it's going to take place at any point in time. And that's because there are risks to watch out for. I see the foreign exchange risk. Looking at what's going on in the forex markets, the dollar is trading at around 600 naira in the parallel markets. At the NAFEX window is around 415 naira. So there is a wide spread between the official and parallel market rates. So this further heightens the risk of further devaluation going forward. So we think that will keep foreign investors on the sidelines. Then we also have the issue around 2022 being a pre-election year. Talks around politics should start gaining more momentum in the second half of the year, and that should further dissuade foreign investors from coming into our markets. So for now, it's going to be more of local investors. How are we going to see the foreign investors come back to the markets? Not anytime soon, not even next year. It's going to take a lot of drastic changes as regards some economic policies before these foreign investors can visit Nigeria again.
So basically, local investors don't care that it's a pre-election year. They're ready to just wait the market out and keep investing. Is that what you're saying?
So it's all about managing your risk at the end of the day. So you want to know if you still have appetite for equity investments despite these risk factors. Yes, 2022 is a pre-election year. But when you look at what the fixed income space is offering you, you have about 3 to 4% return at the end of 1 year. Then you start asking yourself, this is not even enough to beat inflation, which is currently around 16%. So that might induce you to increase more funds in the equity markets. But that said, even in the equity markets, you still want to manage your exposure. You want to invest in stocks that are fundamentally sound, like Guinness, Access Bank, Zenith, Dangote Cement, WAPO. Even in the telecommunication space, like MTN, Seplat, these are stocks that are fundamentally sound, and they've actually returned, impressive returns so far in the year. So these are stocks investors will still continue to maintain exposure to, even in the second half of the year.
Yeah, and looking at the consumer good counter, we're seeing that perform well. About 2 days now. What do you think is driving that?
Quite surprising, really. So at the start of the year, the expectation was that a number of these consumer goods companies will struggle because of heightened inflationary pressures. You know how the competition in that space is very steep. So they actually struggle to pass on higher selling prices to their consumers. But looking at what a number of them have done so far, in the year, looking at their Q1 results, a number of them reported significant growth in top line as well as bottom line. And that's why we saw like a late charge in consumer goods stocks. Within the last 2 weeks, they've returned up to about 15 to 20%. The likes of, Guinness, Flour Mill, quite a number of them. And the expectation going forward is that we might see more positive run in these stocks as local investors begin to buy more of these stocks going forward.
Yeah, and some industry experts, have the view that the capital market, remains the surest regulated investment medium to beat inflation in Nigeria. Are we saying this because it's in a positive trend right now?
I think you get comments like this when the market is going up. So typically, people will always want to sell the equity market in situations like this. I think we just need to understand what's really driving this stock performance. Like I said at the start, rates in the fixed income space are very low. Before now, institutional investors like your PFAs, that's your pension fund administrators, used to prefer allocating more funds to the fixed income space. But given that rates in that market are very low, a number of them are increasing their exposure to the equity market. And that has really helped to support trading sentiment in that space. Also coupled with the fact that despite geopolitical tensions going on all over the world, where equities are trending downwards in the US markets, in the European markets, you see more of downtrend. Here in the Nigerian markets, we've seen more impressive corporate releases despite rising inflationary pressures. And we think, this will continue to support, trading sentiment. However, in the second half of the year, when, politics starts, heating up, there is a likelihood that investors will want to slow down on their exposure to the equity markets and play more in the fixed income space. Although in the fixed income space, we expect them to stick to short-term instruments, like your 1 year or 2 year instruments, in order to avoid duration risk.
Right. And look, I remember last year, when the global equities market was had a good spell, was in positive territory, but the NGX was in negative territory. So I'm wondering, is there some kind of inverse relationship between the Nigerian equities and global equities market?
Not really, not really. Although the policies of the CBN, in a way, have been to isolate the Nigerian market from other developing markets. Because if you look at the trend in other developing markets, quite a number of them have raised rates in line with rate increases in the US. But that's not the case for Nigeria. Instead, the CBN is still leaving rates very low in order to support economic growth. And that has really benefited a number of companies in the REIT sector. And we think this will continue to bode well for them, although it's not sustainable. At some point, the CBN will have to raise rates in line with what's going on in global economies. But for now, it should be a major boost for domestic players. And that should translate to positive sentiment in the equity markets.
And right, we know how positive sentiment in any market attracts new investors that also want to take part in the profits. But you're looking at the market right now. How would you describe the risk-reward trade-off for new investors looking to get into the market right now?
Right now, I think new investors should be very cautious. Very cautious. At this point, they should be very price sensitive. Because the likes of Guinness has already returned more than 100%, trading at around 110 naira. Same for Seplat. We've seen the same thing for Fidelity and a couple of other stocks, really. So right now, new investors should be very cautious because any moment from now, investors will just start taking profits and they start selling down the stocks. Like I said, the domestic investors are not long-term oriented. They are not going to hold on to these stocks for the next 2-3 years. After some weeks, they are going to start selling, and the likes of Guinness can drop back to around 90, 18 naira. So for an investor that is buying it at 110, that indicates a loss. Same thing for Seplat, same thing for Fidelity Bank. So for new investors, they need to be very price sensitive, and they need to watch out for stocks that have not really moved significantly. The likes of Julius Berger, Lafarge Africa. So these are stocks that are still trading at attractive prices that I believe new investors can actually pick at this moment.
Right, so that you don't end up buying the top, when you enter this market. But looking at, the first half of 2022, what stocks are on your radar, going forward?
So at the start of the year, we at Vertiva Capital, we came up with our top conviction stocks that range from banking to consumer goods, oil and gas, and telecommunications. And so far, these stocks collectively have returned about 42% year to date. A number of them have rallied, but there are some that are still trading at low prices. The likes of Zenith Bank, Waco, Dangote Sugar, Dangote Cement. These are stocks that I think that can also pick up in the second half of the year.
Right, and these are very interesting times in the market. But for the fixed income space, what are your expectations for yields?
Interesting one. I like this question. Quite a number of investors really want to know what rates are going to look like in the second half of the year. So the thing is this. The CBN is still pro-growth. The CBN still wants to support economic growth in Nigeria. And that's why the CBN will continue to leave rates relatively low. But the reality is this. At some point, we are going to see upward movements in rates in the secondary market. And that is because of inflationary pressures. Inflation currently is around 60%. Given what's going on in Russia, Ukraine, disruption to the supply of a number of global commodities, in the second half of the year, we should start feeling, the rise in the prices of these commodities, and that should further, increase inflation levels. So we do believe that in the second half of the year, we are going to see rates inch up, maybe by 100 basis points or 150 basis points. And that means that at this point, investors might want to allocate more funds to the fixed income market. However, we need to retrace that even though we expect rates to increase in the second half of the year, we are not going to see rates rising to as high as 9%, 10% in the fixed income market. So that means rates are still going to be lower than pre-pandemic levels of 12 to 13%.
Right. So much for investors to look forward to in these markets, and not an easy time to be an investor, I must say. Thank you so much, Luke Ofojobe, Head Research, Vertiva Capital Management. It was great having you on the program, and enjoy your weekend.
Thank you for having me today. Thank you.